Hello, today is the 1st of September 2012. This is a part 2 video. In part 1 I went through this stuff in here, as well as a little bit on the Federal Reserve on Friday. This part we're going to look at gold. One chart with a gold to silver ratio, and I got 5 different charts on Morgan Stanley. So let's get started right here with the daily chart on gold. A lot of tests on 1623. You can look at my older videos talking about that. I like the pattern to break out. It did just that. And when we break these key levels, what's going to happen? We're going to find support here? No. Was it a pierce above? No. Was it a fast level in the next move? Yes. So now we're at that target that I was talking about of 1685. It's pierced above it, but not that much. Enough where, well, it could be that resistance field, but the questions remain. If it's not resistance, is it going to be resistance with maybe a little bigger of a pierce above? Is it going to find support, or is it going to go fast to the next level? And what is the next level? Well, when you break past the 61.8%, the next level is a previous high. Previous high is 1791. Let's look at this on the 2-day chart. And these are the images on the more information box. The date we're looking for, if you're looking for these charts, is August the 31st. 2-day chart. There's the breakout. So again, that's the previous high. We'll have to wait and see how this all plays out. But again, those are the things, because they're going to pierce above and then do that. I don't know. Is it a resistance right now, and thus we're just going to pull back like this? Again, I don't know. And then you got support to go higher, and then a fast move to the next level. And I'm just going to say, well, that's a fast move to the next level right there. So that's a 2-day chart. And this is all within this correctionary phase. We're now looking at this on a 40-day chart. Each candle is 40 days, times it by 100. That's 4,000 days. That takes us to the late 90s. I want to focus on the upper bands. It hasn't even touched the lower bands, but upper band, boom. Oh, it came close to hitting it. And it had a small pullback, stayed within this band. Next time it hit, it was in here. Had a little bit of a sideways correction. Went higher, hit this band here, or came close to it. Had its biggest pullback since this bull market has begun. And then, of course, we tested it here, sideways correction. So what does the trend tell you? And that's all I'm going to have to say about this. Well, there's one more thing, because yeah, I wrote it on the notes so I wouldn't forget. And that was fib to move target, approximately 2,300. Well, let's explain what that means. When things are in an uptrend, I look at these lines here, and, well, it's not for support. Not until the market tells me it's ready to correct over. It's not telling me that. What I'm looking for is, well, what's the next level where this line makes sense to be at? And the answer is right here. For that to be the case, price action would have to go up to 2,300. With that being said, I'd be looking for this breakout to occur and maybe go up to 2,300, and then we'll see how it plays out from there. But decent chance we'll have some sort of correctionary phase at that level. All right, that's it for gold. Other than the ratio we're going to do now. And gold to silver ratio, 38-hour fib break. Well, that's the last chart I showed a week and a half ago or so. So let's just go to the ratio. If I could find right here, 38-hour chart. Yeah, let's left you off right here. And notice that there's resistance at this mark. So same thing as what I've been stating for a while about breaking these key levels. This is the opposite of an uptrend, of course. When you break support and you're looking for a pierce below, well, it didn't happen. Fast move to this next level. Well, it found resistance here, so that's what happened. We came up and found resistance. It looks as if now we're going to have a test of the lower mark, which is 5183. If you were to find an entry to get in, your entry was already played. You'll wait for the resistance to come in, but you can always shorten the time frames. Plus, this is hard to play anyway. It should go to 5183 in the next few days and weeks. Okay, Morgan Stanley. They're a lot in the news. They are big time. And I'm saying the 2-day chart, the breakout question mark? Well, let's look at the 2-day chart. Does it look like a breakout to you? This is the top, this is the bottom. Key top, key bottom. Find resistance where you're supposed to. Now here, this is where you'd want to come back and then make the higher move, but it didn't do such. It came back to a matching low, but back up to the previous high, higher low pullback, and then back up again last Friday. Quite frankly, this is a bullish pattern to me, telling us that there's a likelihood move up to here. Still has to break this resistance for it to really come into play, but when you're seeing these higher lows on the breakout, you may want to give it the credit for it to do such a thing. Now that level is 1719. Now we look at this further. I have bear market on the 8-day chart. Yet I'm saying break it. Well, let's just take a look at that 8-day chart then. Okay, key top, key bottom. This is the key top, this is the key bottom. Well, you found resistance. In fact, you had a chance to get above it, but it didn't happen. Notice you come up to it, pull back to the higher low, then you break it, and then you find support at this level. Geez, that's bullish. And then you even broke up past this high. But this is a failed move. And oftentimes from failed moves can create fast moves. And it's been a somewhat of a fast move, but when I see a situation like this, come close down to the previous low, have a little bit of a correctionary phase, well, this is making that move to 17 on the previous chart not look so good, but even if it does, that doesn't make it bullish because you'd still be below this line. And obviously breaking the support to me looks very, not only deadly, but it also looks like it wouldn't be a surprise if it were to occur. Next one, 15-day chart, 2008, crash success. I'll explain that looking at the chart. So there's a 15-day chart, which shows us the 2008 crash. Now this was wild moves in here. For the move from point A to point B to be a failure, it needs to break and hold above this level. It broke above it, but it didn't hold above it. It had two tests of this level, and then now it's fallen back and it's just holding up above around this line, and it's below it now. This is not a bullish chart. It's the actual opposite. It's a bearish chart. So it's telling us for this particular stock, most stocks selling was a failure, but not this one, at least not as of yet. And not looking so good. Now let's take a look at what happened in 2008. That's what I got here. October 14, 08. Daily chart, wild moves. Oh, we're going to see some wild moves. I got a lot to talk about within this. You're not going to find it in this directory. You're going to find it in the older photos. Actually, historical photos. And here we are. This is the daily chart for Morgan Stanley back then. I say a picture can say so many words. This might be one of those situations. This is on October the 14th, 2008. These movements here look really tiny. They weren't small moves. It's just in comparison to what started in here, they became a lot smaller. In fact, this low here is a little under 30. We'll say 29. And this top is like 45. That's up over 50% from bottom to top. That's pretty decent volatility, actually. And then the volatility increased even higher. Now let's look how this Fibonacci level played. I will point out, however, that let's just look at the Fibonacci 75.50 high and 654 low. We're looking at the same levels here on the daily chart. So that's what's important to note. Okay. You broke through support, but notice this gap here. It gaps lower, it comes up and finds resistance. Then the next day, finds support, comes back higher, and then you have this wild, this is a Lehman Brothers move, but let's just look at the volatility. Bottom's around 11 something, top's around 25 something. That's more than 100% volatility from low to high in one day. Resistance where you're supposed to. You try to stabilize in here, and then boom, the markets just crash, and then it just gets wild. This was October the 10th. It was a Friday. I remember this day like it was yesterday. In fact, that was the day to get out of shorts, and I say that because my Dow target of 8,000 got reached that morning. All shorts should have been covered back in here. And then you notice that the price action in 3 days went from 6.75 up to 23, tripling in under 2 business trading days. I say this because these wild moves can and should happen again. Final chart. We're looking at the multi-month chart with upcoming crash indicator. Then I'm going to say goodbye. Okay. So let's take a look at this. I say multi-month because not every candle is the exact same amount of months. In fact, the first 35 or so are 3-month candles and everything else is 2-month. But it paints out the story. Support, resistance. And now what we're seeing is that it's found 61.8% from this high and this low. This low in 2008 was a match of the early 90s. Now we've resisted this area. What this tells me is that we are having, it's looking as if it's going to come back down and test the previous low of 654. And that's a loss of more than half its value from where it's at now. Yeah, this does not look good. And then, of course, if you look at stuff like Citigroup, it went down from like $50 to $1 back in the day. AIG pretty much down to nothing. If this thing fails, I would guess again it's going to around, well, $1. Now, I say goodbye. Thank you for tuning in.